Enron scandal. A company who was named energy giant Fortune 500 company, Wall Street darling, high flying stock. So what made it to be named as the Enron scandal?
Let me start by saying that deregulating a financial market, in spite of its few advantages, has been one of the major reasons of many of the financial crises. When there is no central authority to keep check and balance, the so-called free market is driven by greed, hunger, and power. That's what was happening in the Enron since it was founded.
In 1985, America's natural gas market was deregulated, which motivated Mr. Ken Lay to found Enron through a merger of two companies, H&G and Internorth Inc., previously serving two different parts of America, one to the north and other to the south. In 1987, two traders made bets for Enron on whether the prices of oil would rise or fall. The company showed tremendous profits, which was suspicious. Lay, who was warned by the board of directors, had taken no actions for as long as they were making money for him. He was happy. But traders had gambled away almost all of the Enron's reserves and left Ken Lay with a search of new potential moneymaker minds. And here comes the main character, Mr. Jeffrey Skilling. He came up with making Enron a kind of stock market for natural gas, and for this, he got to be approved by SEC for mark to market accounting. But what is mark to market accounting? MTM can present a more accurate figure for the current value of a company's assets based on what the company might receive in exchange for the asset under current market conditions. If an investor owns 10 shares of a stock purchased for $4 per share and that stock now trades for $6, the mark to market value of the share is equal to $60, whereas the book value might equal only $40. Similarly, if the stock decreases to $3, the MTM value is $30 and the investor has an unrealized loss of $10 on the original investment. Apparently, there is no bad thing about MTM accounting, but Jeffrey has got to do manipulation with it. And that's why Jeff called it hypothetical future value accounting. It was the time of biggest bull market in the history of the world, commonly known as dot-com era. In July 13, 1999, Enron stock were valued at $42 per share. Enron seemed to go higher and higher with no visible loopholes since they were got manipulated by the analysts who were getting paid for this task. An illusion was created for the investors that it became impossible for people to not think of investing in Enron. Enron had vast natural gas operations all over the world, and most of them were performing terribly. Enron made some very stupid investments like that of Tap Hole project in India, where Indians couldn't afford to buy for the power produced by Enron. The Enron Dab Hole project was the most spectacular failure of all. And now was the time for Enron to come up with a new idea, and it was to enter in California's deregulated electricity market by merging with PGE. Enron also stepped into broadband business, and due to the hype created by PR and market agencies of Enron, in January 2000, Enron's shares were valued at $68 per share, and one day ahead, on January 21, it was worth $71.62 per share. But soon the Enron broadband business network collapsed since the technology didn't work. But still, on 23rd of August 2000, Enron's stock value was $90 per share. By the end of 2000, when most of the internet companies began to fall, Enron was the only shining star.
Assalamu alaikum. This is me, Abdul Hannan Siddiqui, and I would like to discuss further Enron scandal. Now we discuss the role of Mr. Andy Fastro. The CFO of the company was basically running SPVs, the special vehicle companies for Enron that were the heart of the accounting scandal. He was responsible for structuring these entities to help Enron hide debts and inflate points and profits. Let us explain what is SPV, the Special Purpose Vehicles. The Purpose Vehicle is a legal entity created for a specific, often limited purpose. It is used to isolate certain financial assets or liabilities from a company's main balance sheet, provide a degree of legal and financial separation. The main purpose of this SPV is to capital gain. We know that in real terms Enron is in bad condition. They need capital. For the capital formation, they can they can introduce SPVs which cause risk management, asset protection, and off balance sheet. And these are the highly affected cause of Enron company. Mr. Andy's most ambitious idea is LJM, Limited Joint Mobility, had been made to seem so great that almost 96% of individual bankers invested in it. Now I have talked about the Enron investment strategies. One of the largest investment of Enron is in California, the American largest state and world's sixth largest economy. Have 26,000 miles of California power line face blackout second day in a row because of the failure of Enron. Blackout is not the problem, but the real problem is the blackout is this blackout is held in the winter season where people using half of the electricity they use in summer. The real purpose of Enron is to make profit so that they start export the power out of the state which belongs to basically to the California city. The shortage in California is the answer of the greed of the Enron company. The Enron is not stop here. The electricity wholesaler like PGE were buying electricity at higher prices and due to price gap. They couldn't sell at higher prices. They were facing loss and soon PGE got bankrupt. It was a merger company of the Enron, and if I can say that the gateway through which Enron enter here and now left the whole state with misery.
This is me, Ahad Akram. I would like to continue further the discussion of Abdul Hannan Siddiqui. Now I start the topic falling period of Enron. Okay, what was the falling period of Enron? And since every peak has it declined, so had Enron. Stock value start declining like in summer of 2001. It was at $54 per share. And this graph is also showing increasing trend first and after 2001 it suddenly declined due to reason of expose of Enron scam. After falling of Enron, all of sudden on August 14, Jaffer Skilling left Enron. On August 16, it further declined to $36.85 per share. All of sudden, the day after Skilling resigned, an executive of corporate development sent a letter to Canley, specifically pointed out the potential consequences of Enron's use of special purpose entities and how these practices were affecting the company's financial stability. She highlighted that the off balance sheet financing was a serious issue and urged Enron's top leadership to take action.
I am Hunain Ahmed and I would like to continue the above discussion. And the things now were out of control. Investors were anxious. Security Exchange Commission has started its investigation about Enron share prices. This graph was actually the fall of the Enron and the price of the stock were valued by SEC and the value of its $19 per share. Enron accounting firm Arthur Andersen had begun destroying Enron files on the October 23. They shredded more than 1 ton of paper. And Andy did not left but was fired when it was discovered by a board that he made money for himself too. Like as long as it was for Enron, he was the best guy, but now when they know that he even did fraud with the company too, they were not really happy. So after this, on December 3, its value was 40 cents, and it's a major decline sharing price of Enron. Enron declared bankrupt in after the share price was falling too much and 20,000 employees lost their jobs and top executives were behind the bars. Ken Lay, Mr. Founder, did not take any responsibility, saying that he was unaware because the only thing he was looking at all this year were the increasing number of without any care of how they have been made. These are main points of how Enron has fraud to its people and economy, and the main points are complete regulation, wild gambling, SPV phony companies, lack of transparency, mark-to-market accounting, and inflated profits or cookbooks. These all things are adopted by Enron company to make a vulnerable profit or make on the benefits. Now focus on remedies that government follow to detect Enron fraud or any financial market fraud. And the points are government oversight and legislation, transparency and disclosure, whistleblower protection, independent auditors, stronger oversight of SPES, stakeholder engagement. These all of points that government should make. The presentation presented by Hunain Ahmed, Mariam Ali, Abdul Hannan, Ahad Akram, and Mohammad Danish. Thank you.